So travel involves some sort of overnight. It's usually outside your home area. So overnight stay for business purposes. We're not talking about for personal purposes, for business purposes. Basic travel requirement is that the trip requires rest or sleep. Significance of being travel away from home is that it allows the deduction of meals. So in your day-to-day transportation expenses, you notice we did not talk about meals. If you're just driving around and you're going from client to client during the day and you swing through the drive-thru at Chick-fil-A and get yourself something, that's not a deductible business expense. If you took a client out for lunch, that would be a deductible business expense, but you just swinging through the drive-thru on your regular day is not a deductible business expense. When you are traveling away from home, however, and there's an overnight stay, now that does make meals a deductible expense. It also makes things like lodging, so hotels and that, other incidental expenses such as dry cleaning. So if you have to clean your clothes while you're away, that becomes a deductible expense. All travel expenses can be deducted if the trip was entirely business related. So it's super easy to deduct these if there was no personal element to the trip. The trick comes in when there's some personal element to the travel. So here we've got Alba self-employed. Again, this is not for employees. These are for businesses. So you have to be self-employed, or these are expenses that the business incurs. Primary business is in New York City. She flew to Washington, D.C. in the morning for a business meeting, then flew to Boston for an afternoon meeting. She then took a late night flight home that evening. This is not travel. This is transportation. All of those would be deductible, but they're just not classified as travel. And therefore, her meals would also not be deductible unless she took some clients out while she was doing that. So only the transportation in that case would be deductible. If, however, she spent the night somewhere before and then came home the next day, that's now considered to be travel, and her meals would be deductible, as well as her lodging. If a temporary work assignment can be expected to last less than a year, travel from the taxpayer's tax home to the work assignment and temporary living costs are deductible. Let's see. If it's expected to last more than 1 year, though, it would be considered permanent, and essentially what that is a change of your tax home. So, but that 1 year cutoff is what's critical there. All right, so like I said, it's super easy when we're talking about if it's 100% for business. It's a little bit more difficult when we are combining business with personal. So, and there's a difference in rules between domestic. So this is a business and personal. So for example, you've got a conference to go to in Orlando, and the conference is going to last 2 days, and you decide to bring your family with you because they really want to go to Disney World, and you tack on an extra 3 days and you go to Disney World. Now you have combined business and personal travel. And there's a difference in rules whether it's domestic or international. Okay? So, if the trip is primarily a vacation, but some business is transacted, then the transportation costs are not deductible. So, there's a difference here. Primarily, business versus primarily personal. Difference between that would be we're going down to Orlando, we're planning a family trip, and while I'm down there, I'm going to take 1 day and I'm going to go visit a client. That's a primarily personal trip. My example before, I've got a conference that I got to go to in Orlando. The conference is 3 days long. I'm going to tack on an extra 2 days to go to Disney World. Now it's primarily business, but I've tacked on some personal. So any expenses, so the transportation, if it's primarily personal, transportation is not deductible. Only the business portion is deductible. So my example of going down and having the week in Orlando and I'm going to go visit a client, if I have to take a taxi to get to my client, that's going to be deductible for me. But the cost of my flight is not going to be deductible because it's primarily personal. If the trip was primarily business related, even if some personal vacation is involved, then the transportation expenses are deductible. But only for the taxpayer that has the business purpose. So if I'm bringing my family down, I don't get to deduct their flight costs. But if I'm going down to a conference and they just happen to be tagging along with me, my transportation costs are going to be deductible as long as it's primarily business. But the cost for my family is not going to be deductible. So let's see. We've got, how are we doing? 5 minutes. Timothy, self-employed, personal financial advisor. He flies to New York to visit his parents for 7 days. While he's there, he rents a car to meet with a business client one afternoon. The rental car and any other costs associated with the business meeting are deductible, but the cost of the flight is not because it was primarily personal. This was a personal trip. He just tagged on some business. A lot of people think they're really cute. They'll say, well, I'll make this into a deductible trip or a deductible expense by just, having a business dinner or something like that. Or we'll just talk about business. We'll say that it was a business. That's not how it works. It has to be primarily for business. So, same facts, however, Timothy spends 5 days in New York conducting business, and then he drives to his parents' house for the weekend, for 2 days. Now it's primarily a business trip. Transportation would be deductible, as well as the meals and lodging while he is on business. Expenses occurred while visiting his parents for those 2 days would not be deductible. Okay? So if it's primarily personal, the transportation is not deductible. Primarily business, transportation is deductible. And so you also, lodging, meals for, so you can also include the lodging, the meals, for the time that you were there on business. For the time you were there for personal purposes, you don't get to deduct the meals and the lodging for that time. All right, so for foreign travel, a trip is considered entirely for business if it meets one of these criteria. So if you do not have substantial control over arranging the trip, then it is considered entirely for business. If you are outside the United States no more than 7 consecutive days, you don't count the days on which you leave or return. Or you spend less than 25% of the time on personal activities. The days that the trip began and ended are counted. And vacation is not a major consideration for the taxpayer. So one of those 4 criteria have to be met. I'm not going to write those down, but one of 4. So 100% business. If one or more of the conditions are met and the trip to the foreign country is considered primarily business, taxpayer still has to allocate time between the business and the non-business days, so essentially we consider it to be, I shouldn't say 100%, we consider it to be primarily business. primarily business. And then the same criteria applies up here. Taxpayer has to allocate travel time between business days and non-business days. So to calculate deductible amount of the round trip travel expenses, they multiply the total trip cost by the fraction of the number of business days to the total number of travel days outside the United States. Travel days count. You have a problem, you have a homework problem that involves figuring out how much is deductible for travel expenses for somebody that is traveling for business and personal. I don't think it's an international trip, but keep in mind on that problem, you have to include the number of days, in the total number of days, you include the travel days as business days. So what I mean by that is if you have, like, say the trip was 7 days, 2 plus 2 travel days, and 4 days were business. Well, that means that the proportion of business days, these are considered business days. So 4 plus the 2 travel days. So a total of 6 days are business. If you were gone for a total of 7 days, then 6/7 of the like the meals and lodging are business. So you get to include those 2 travel days as business days. Here's some more details there. So meals and entertainment, I'm sorry, I'm going through this really fast because I'm out of time. So meals are deductible at 50%. All right, I'm gonna erase this. So for meals, even though we say if the meal is deductible, if it's deductible, half of the cost is deductible. Okay, so meals, 50% deductible. So if you spent $300 on meals during for your business meals on your 1 week trip, you get to deduct $150 of that. It has vacillated between 100% deductible and 50% deductible over the last couple of years. During COVID, they made it 100% deductible as a way to try and encourage people to eat out at restaurants more. But it's back down to 50% deductible. Another thing that you can do if you don't want to take actual meal expenses, there is a standard meal expense. There's a chart that the federal government puts together. This is called a CONUS rate, continental U.S. Based on your geographic area, it will give you a daily rate for what is an average expense, what you could expect. So the CONUS rate in 2024 was $166 a day, which included $107 for lodging and $59 for meals and incidentals. I don't know where, $107, I don't think I'd want to stay at that hotel. So it's $107, but that's like a basic standard rate. Otherwise, if you don't use the standard rate, so you do still have to, if you don't use the standard rate, you have to use detailed record keeping. You have to have receipts and all of that stuff for everything. If you do use the CONUS rate, you don't have to keep the receipts for all of that. Okay, that's it.